Hello, all, and welcome to my channel. My name is Aaron Schaefer, and today what we're going to do is discuss and reveal my entire portfolio for you. So, this is my entire individual portfolio. Now, I want to say in advance, I'm not a financial advisor, and I don't give financial advice. This is just something I do for my entertainment. So this is going to give you some ideas of some of the stocks that I own. So I put together this list in Google Sheets, and it will give you the stocks that I own, percentage of portfolio, cost basis, which is how much I paid for that amount per share, current price, my gain loss percentages, trailing PE, forward PE ratios, dividend yields, and then some comments. So what we'll do is we'll go through each one of them. My largest position is Chipotle. Now I've owned this one for 7-8 years, ever since they did they had the salmonella crisis. If you guys remember that, it's a bad crisis, and I bought a lot of shares back then. In that company and just let it ride throughout the years. And so that's where I get this nice 392.9% gain on it. I did buy some more, I think around the $32, $33 range in that area, but after even all of that, I'm still at that nice gain here. So I think there'll be a run to $50, but can't count on the market for anything, you know. But I think it'll come back up $50, and I really want to take out my initial investment out of this. It's going to be a massive tax gain that I'm going to have to pay, but it's better than just just go ahead and just take the money off the table and let the rest ride. That's how I feel about it. Second mark in that makes up 33.82% of my individual stocks. So these are all my individual stocks, but I've got index funds that are about 90% of my investment. And I think that's a really good idea to have individual stocks as a speculative investment. But you really can't beat the indexes. I mean, the harder you try, even professionals could not beat the indexes by buying individual stocks. So I want to just make that point clear right now. This is just something, these stocks are the ones I believe in for the long term. And so the second stock I have here is the A-Aron Enterprises. And I just had a video, and I just posted that yesterday, why I believe that is a very good stock to own. And I've got 27% of my portfolio. I had early cost basis is $128.99. Got a 341% whopping gain on that one. Kept it for a long time. And the reason why I owned that one was because I really believe that over time police agencies would get more body armor because the camera doesn't lie, and I believe that's what I believe when I bought it. And obviously I got kind of lucky in a way, but okay, I had a nice gain on it. So if you look at their revenue growth, they're usually up 30 to 40% revenue growth year over year. The last quarter was 39%. So I'm going to continue watching that. You know, obviously they've got a high PE, and that's like their secondary objective is the PE. They're really trying to get a customer base inside first, and then sell the products as they go through, and then it'd be hard for them to leave. So I'm not too concerned about this at this point, but you always got to keep that in mind when you're investing, that you've got to look out for the PE ratio. Third stock I have is ExxonMobil, and that's an energy play. I've had this one probably for 4 or 5 years. Also, I've got a really nice gain on it, and in collecting the dividends. I didn't even count the dividends in this percentage. It is producing 2.71% dividend yield right now. Obviously, it was a bigger dividend yield when it was lower price, but that's okay. the ongoing war in Iran, that's really why I've been keeping it lately. I thought about just trimming some position off of it, but I think I'm just going to let it ride. And that's what I'm going to do for that position. Fourth position is Disney. I've had it for probably 4 or 5 years. It's really done nothing. I've got a 21% loss on it so far, and I've dollar cost averaged a bunch, quite a bit of different spots on this one through the years. And I really hope that the new CEO that starts, Josh DeMario, starts March 18th of this year. And hopefully he can turn things around, and really want to see how he can turn the ship around. I do know they have the politics and things have really got in their company, and it's basically kind of divided the nation, and it kind of stunts their growth because of that ideology. So I really want to give another year and see what this guy can do first, and I'm just going to hold my shares for now. I'm not going to buy any more. So the next one is Newell Brands, and it's got a 6.41% dividend yield. Heavy debt it's really heavy debt. It's got a nice dividend, but I looked up Google Gemini, and I put on and I said, well, how what is the chance of that bankruptcy? And they said 50% chance of bankruptcy within 2 years. So I'm really kind of concerned about this. I even sold just a little bit of it last week. But I'm really concerned about it because it has coming off its 52-week low quite a bit, so maybe this would be a time to kind of get rid of some of this. Now, of course, it's only a small percentage of my portfolio, only 5.47%. So the next two is Salesforce and ServiceNow. Now, this is the two plays that I've just recently owned. With the SaaS apocalypse going on, I believe these two software stocks. I am a computer programmer, so we do have ServiceNow in our business, and I'll tell you right now, I think AI is only going to benefit them when they have that AI products, because they'll just buy these AI companies. They're a huge company. So they're just going to keep adding it to their collection, and I don't think they're going to die. But I mean, you've seen some of these SaaS stocks have lost 50% of their value, like Salesforce and ServiceNow and Adobe. When I talk about it later, they've lost like 50% of their value. So I think at this time, they're getting a pretty good PE ratio here. ServiceNow is getting forward PE of Salesforce is 14 forward PE, and ServiceNow is 27. I don't think that we've seen that in their history. It's been a long time since we've seen those PE ratios. So they've got a good customer base. They're not going to die. There's a lot of these AI companies that come up that can do exactly what they can do and replicate that, but I think a lot of customers, they're going to have to pay for that marketing to get that customer base. And I believe these companies are the ones that are going to survive. So General Mills, I also have General Mills. I've owned that for 8 some years. It's a food stock. The only thing I don't like about that is it's not a lot of more people are eating more nutritious, and also I think they're losing a lot of business to private labels. That's one bad thing about it, and. So it's got a low PE ratio, collects a nice dividend, 5.48%. I'm just going to keep it for a while longer. I am only down 10%, but this doesn't count for all the dividends I collected, which is 5% a year. So if this comes back to even, I might just take that position off, and just start adding it to maybe one of my index funds. Adobe, again, it's part of the SaaS apocalypse, as you can say. I am a little concerned about this one because there's a lot of AI going that can stream content. You see all these companies that come out that can, you can put a prompt together, and you can automatically get the exact generation or the video that you want to happen. I know Adobe does a little bit of that through. I've been reading today about that. I think it's Banana Nano or something like that to that effect. So I am keeping this. It was such a small position right here. I'm just trying to feel it out a little bit before I buy any more. But that's the way for that. Again, these are my individual stock positions. It's less than 10% of my entire portfolio where I can just kind of dabble into these stocks. And then I do want to mention iRobot was one of the holdings that I've had a long, long time. And obviously, you probably heard in the news that they went bankrupt, so I held all the way through the bankruptcy. So I get $0 back on that one. So it's kind of funny how that all happened. And they had Amazon was trying to buy them out, and it ended up the EU stopped the action, and that transaction never went through, and they were already hurting financially already. And when that didn't happen, it just spiraled down like a rock. So it's okay, that happens. I mean, it happens to the best of us. Just have to learn from it and go on. But that's my portfolio. And again, I don't give financial advice, but it's just some stocks to consider. Thank you all for watching my channel, and comment below if you have any questions or like future content. Thank you.